Hi, I'm Patrick Cannon of Cannon Chambers, and I'm a barrister who specialises in property taxation, including stamp duty and stamp duty land tax. I advise on stamp duty on property purchases, and I also represent taxpayers in inquiries and appeals against HMRC in the tax tribunals and the courts. You can check some of my recent tax tribunal cases in the notable cases section of the Cannon Chambers website. This video is about multiple dwellings relief, or MDR as it's often called. And if you are buying a property that includes more than one dwelling, or you have bought such a property in the last 12 months, it's important to know about MDR so you can make sure that you have not paid more stamp duty than necessary. We'll look in detail at the relief in a moment, but it's quite important to make sure that you don't make an MDR claim where you have, say, a granny or a guest annex that is really only suitable for use with the main dwelling and does not qualify as a dwelling in its own right. Why is this important? Well, you don't want to make a claim where, on the facts, MDR is not actually available because the additional property doesn't qualify as a single, separate dwelling. And what's more, HMRC operate a very confusing policy of initially accepting MDR claims or of paying out stamp duty refund claims, but then opening a check into such claims towards the end of the 9-month inquiry period, following the submission of the SDLT return or the making of the refund claim. And then in some cases, asking for payment of the stamp duty that has been saved or the refunded amount back if, on review of the property concerned, they disagree that there was an additional dwelling or dwellings at the property, or that the conditions for the multiple dwellings relief were not satisfied. In these cases, and subject to any appeal against HMRC's decision, you may have to pay the additional tax to HMRC, plus interest, and depending on the facts, a penalty for making a claim that could not be supported. Well, what exactly is multiple dwellings relief? Well, MDR is a tax relief. That's to say, if you can claim it, it will reduce the amount of stamp duty that you have to pay on the purchase of your property. The basic idea is that where you are buying 2 or more dwellings in a single transaction or in linked transactions, then instead of applying the stamp duty rates table only once to the entire purchase price for all the dwellings, you're allowed to apply the rates table to the average price of each dwelling separately. That is to say, the total price divided by the number of properties. Now, this means that you get the exemption for the first £250,000 of the price, and then the graduated percentage rates for each subsequent slice of the purchase price on the average price of each dwelling instead of once on the total price. And this can result in a very worthwhile tax saving. For example, take a property purchase consisting of a house with a separate cottage in the garden for a total price of £1 million. If MDR is not claimed, the stamp duty charge will be £41,250, assuming, of course, that the buyer is UK resident, that they're not a first-time buyer, and they don't own additional residential properties. Now, if MDR is claimed, then the effect of this will be to reduce the SDLT charge to £25,000, which is a saving of £16,250. This reduction is mainly because the purchaser gets 2 bites of the exemption from stamp duty for the first £250,000 of the purchase price, instead of only 1 bite if MDR is not claimed. Now, it's important to note that the 3% higher rates for additional dwellings will not apply in this example, as long as the main dwelling is worth at least 2/3 of the total purchase price of the property. And also, do note that there is a minimum amount of tax that must be paid of 1% of the total purchase price when MDR is claimed. Well, what qualifies for MDR? Quite simply, there must be two or more single separate dwellings included in the same transaction or in linked transactions. The difficulty lies in deciding whether the additional accommodation at the property qualifies as a single separate dwelling or dwellings separate from the main dwelling. Some claims companies like to encourage purchasers to submit MDR claims after their purchase when the original conveyancer or property solicitor was not willing to make an MDR claim on the SDLT return. Now, this will often have been because the conveyancer or property solicitor was either not a stamp duty expert or felt that the additional accommodation did not meet the tests for being a single separate dwelling. Typical examples of this will be an internal granny annex without adequate separation from the main house, or a few rooms above a garage that have an office and a bathroom but no kitchen. To qualify as a single separate dwelling, the additional accommodation really does need to be capable of occupation by someone who is not related to the occupier of the main dwelling or in some kind of relationship with them. And that accommodation must have the basic facilities to enable the occupier to lead a separate, private, domestic existence, such as a bathroom, living and sleeping area, and somewhere to prepare and consume food. Now, further matters to consider will include whether or not the accommodation has its own utility supplies and accounts, its own heating boiler, separate council tax registration and rubbish collection bins, complies with any planning permissions in terms of occupation separately from and not as part of occupation of the main dwelling. Privacy is very important, and HMRC will often challenge MDR claims where there is joint use of the garden or the use of the annex in some way impinges on the privacy of the occupants of the main dwelling. Where the annex is attached to the main dwelling, it is vital that any interconnecting doors are separately lockable on each side to prevent the occupants of each dwelling from entering the other dwelling at will. Now, you can read more about these requirements together with HMRC's published guidance and some relevant tax tribunal decisions in the MDR guide on the Canon Chamber's website. One practical tip if you are thinking of making an MDR claim, this is that one of HMRC's favourite ways to challenge an MDR claim is by saying that the annex in question is, quotes, eminently suitable, unquotes, for occupation as part of the main dwelling. So if that is in reality the situation with your annex, then you should think carefully before making an MDR claim. Can you claim back stamp duty? Well, yes, you can. If you have reasonable grounds to make an MDR claim that could have been claimed in your SDLT return at the time you bought your property, then you may be able to make a claim. You have 12 months from the filing date of your SDLT return to submit a claim for stamp duty refund to HMRC. This is referred to in the legislation as amending your return, and it sounds very formal, but in practice, this is done by way of a letter to HMRC stamp taxes, enclosing various pieces of information, such as the signed and dated sale contract, and so on. How do you claim for MDR? Well, MDR is normally claimed in your SDLT return, and you do this by answering yes to question 9, which asks whether you are claiming a relief, and then putting in the code for MDR, which is code number 33. As mentioned, you can also make a claim later on by letter to HMRC, but this cannot be done online and must be done by post. When should you get in touch for advice? Well, I suggest that you or your solicitor or conveyancer should get in touch with me for advice on whether MDR can be claimed on your property purchase whenever the position is not certain and there are factors which both support and count against the additional accommodation being a single separate dwelling. I can review the property details and advise you whether or not there are reasonable grounds to support a claim for MDR, either to be made in the tax return or later on within the 12 months after the purchase. Now, given the potential for HMRC to challenge an MDR claim, I'm frequently requested by clients to provide an opinion on MDR, which can be shared with their conveyancer or solicitor for the purposes of deciding whether or not to make an MDR claim. I'm also often briefed by clients to assist them in tax investigations involving a claim for MDR, and also to represent clients in tax appeals to the tax tribunal involving HMRC challenges to an MDR claim. As a public access barrister, I'm also licensed to conduct litigation, and you can instruct me direct without having to go through a solicitor or accountant. How to reduce stamp duty costs? Well, the most obvious way to reduce stamp duty costs is by claiming any reliefs, such as MDR, or an exemption to which you're entitled. It's also important to get expert advice whenever there's any uncertainty over whether you are actually liable to pay special stamp duty charges, such as the 2% additional rates for non-UK residents, the 3% higher rates for additional dwellings, and whether you can claim mixed residential and non-residential use due to the presence of, say, some property that is put to commercial use, which can reduce your stamp duty from the top rate of 17% on residential property to just 5% in certain cases. If you do pay the 2% or the 3% add-ons, you may be able to claim a refund of these in due course, and expert advice will confirm whether or not you can do this, and if so, what the conditions for doing so are. Does MDR apply to commercial property? Well, not as such, because MDR applies to residential property. However, it's important to be aware that if you are buying 2 or more dwellings and commercial property in the same or linked transactions, then the 3% higher rates for buying additional dwellings will not apply. So in this situation, do make sure that your conveyancer or solicitor is aware in order not to overpay stamp duty. The SDLT computation in these situations can be a little tricky, so expert advice can ensure that you get the computation right. And in that computation, you will be looking to claim MDR on the residential elements without the 3% higher rates, and the commercial rates of stamp duty in relation to the purchase price that is apportioned to the commercial part of the purchase. What are the restrictions on MDR? Well, a very important thing to keep in mind is that around 3 years after you make a claim for MDR, you will receive a letter from HMRC asking you whether, if you still own the property, you have the same number of dwellings at the property as when you made your claim. This question is aimed at the 3-year MDR control period. And this says that if you reduce the number of dwellings for which you claimed in the 3 years following your purchase, you are required to recompute the MDR claim and report and pay over to HMRC the additional tax that you would have paid had that reduced number of dwellings been the case at the time you bought the property. Is there anything else you need to be aware of? Well, people should be aware that property solicitors and conveyancers are often not tax experts. And it's your responsibility, of course, to provide them with sufficient evidence about your property to support a claim for MDR, or to commission advice from a specialist, such as me, to share with them to support the making of a claim. Also, do be aware that the online HMRC stamp duty calculator is a pretty blunt tool, And for example, it doesn't compute MDR for you. So once again, expert advice can help you get the computation right. Okay, so I hope you found this video helpful. Thanks for watching through to the end. You can contact me using the link below if you'd like to instruct me to advise you about a MDR or to represent you in an MDR inquiry by HMRC or in taking an MDR appeal to the tax tribunal. Okay, goodbye.